Patanjali Foods delivered a weak set in their core business, but foods and FMCG continued to do well for them. And that's exactly what the plan for the company was going forward as well. Sanjeev Asthana, who's the CEO at the company, now joins in. Thanks a lot, Mr. Asthana, for joining in. I was listening into your conference call, and you did say that you expect some sort of higher contribution coming in from premium products in your oil business in FY24. Just wanted to know what's the outlook for the oil, your core business in FY24, with regards to the share coming in from premium, the overall revenue and margins.
So thanks for having me on the show. We're expecting that the oil will contribute much better than what we had the previous year because of the shocks that the industry faced and the overall broader market had a challenge with. So this year we're expecting that the margin profile for the broader part of the commoditized side of the oil, we should make between 2 and 4%. On the side of the premium oils that we have launched, we should be looking at a margin construct of 4 to 8%. There is a lot of work which is going on towards the premium offering that we have on the oil side. Broadly, especially the mustard oil that we have under the Patanjali brand, the Nutrilla range of oils that we have, and likewise for the Sunrich, which is a sunflower category oil. So we're expecting that oil will put in way better performance than the shock what the industry across the board faced, both domestically and internationally. So we should be having a good set of numbers on the oil side. It continues to do well. We have grown our volumes by almost 20% last year, and that part is going afoot well on part of the plan. And yes, the year forward on the oil front looks good. On the premium side, I wanted to touch base on the food business, which has clocked in very healthy returns this year. We had 3 quarters of the food business, which we took it in the last fiscal. This year, we're going to get all the 4 quarters of the food business that got acquired. Our nutraceutical is humming on, very well along. We are launching and premiumizing the entire range, starting with sports nutrition, and then we'll be going on to the vitamin, minerals, and supplements. Likewise, on the food business side, we're launching a range of dry fruits, which is an emerging category. We have signed MOUs with 2 of the world's largest companies on, both the pistachio side and the almond side. And similarly, we're working on, the biscuits range on the premium side. So net on the food and the edible oil side, the effort towards premiumization should improve our margins. The sales are consistently growing. So food, we should be doing more than 15% year on year, and we are pretty much on course to achieve that.
15% growth is what you're expecting in the foods business in FY24?
Yes.
Okay, so you spoke about a lot of different categories. We'll discuss that in greater detail as well. But just on the oil business, what is your current market share? You had plans to increase it to double digits. Are we closer to that? What's the absolute figure right now?
So we have grown our volume quite substantially. This year we did about 1.91 million tons of oil, which is almost 20% growth over the previous year. Our market share is now much closer to the double digit. It's not yet there. We should be closer to 9.5%. And as we head into that space, we are expecting to continue growing at between 3 and 4% year on year. But I just want to clarify that the edible oil, the effort is not so much towards more volumes and more revenues. It's much more towards improving the quality of margins and the work that we're going to be doing there.
Which is about 6 to 8% of your overall oil portfolio right now, grows to how much contribution in the next year?
Right, this year we had close to 80% came from oils, and the balance came from the food business. We're expecting that the food business will grow 15% this year. So it should be closer to 7,200 crores or thereabout next year in this fiscal 24-25 or 23-24. And the oil business, even if it remains stable, I'm expecting that progressively this year we should be closer to about 75% on the oil side and 25% towards the food side.
Getting to subcategories now, what was the outlook on biscuits, Nutrilla and nutraceuticals for FY24? How much did it contribute in FY23? Because you do have major expansion targets here as well in terms of revenues here.
So revenues, the blend is good. I mean, what we have is, out of the 3 quarters that we did as a business on the food side, broadly, we did on the food products about the acquired business. We did about 3,800 crores of revenue there. On the nutraceutical side, we had more than 500 crores of revenue, to be exact, 509 crores. We had on the Nutrela business, we did about 566 crores. And on the biscuit, we had a massive expansion. From 900 odd crores, we did about 1300 crores. So the mix of products in the foods business is pretty healthy. The annualized revenues, what we did was 6,218 crores. So we are pretty positive on that front, that all these categories are fast-growing segments. Again, the effort is that, how do we premiumize the offering that we have across all these segments? So there's a lot of confidence that we have in terms of the quality of profits that we have. For example, this year we did 18% of EBITDA margin on the food business overall. And we're expecting to maintain pace with that. And with the premiumization, we should be tending to improve on our margin construct.
The number that you've guided for is close to 20% in the conference call that just concluded, focuses on improving the food EBITDA from 18% to about 20%. And palm oil cultivation is about 1,100 crores that you're looking at in terms of revenue, or that's what you did in FY23 with margins between 15 to 18%. Those are triggers well taken, but the most important question that the street would like to know is what happens to the promoter looking to meet the minimum public shareholding norms. Currently is 80.82% stake. The last couple of months we've spoken, every time you've said that this is going to happen in a few months. That hasn't happened. Just wanted to understand, what is the plan here? How long before you go ahead and meet those public shareholding norms?
So certainly before the next quarterly call, it would be done. The investors was, and we also wanted to demonstrate our performance. So immediately after the announcement of these annual results, we took a pause in last 1 month. We wanted to make sure that the investors absolutely well understood, the company situation. And we are hoping that over the next 30 to 60 days, we should be able to close that.
Okay, all right, Mr. Asthana, thank you so much for joining us and giving us all those details. That's the word coming in from Patanjali Foods. Important clarification on the minimum public shareholding norms as well.
Just a word, Mr. Asthana, you said that you will close it in 30 to 60 days from here. Have you zeroed in on the form? Is it via a QIP? Is it an OFS? Or is it fresh capital being raised? Just wanted to understand, or is it promoters placing the money to some other institutions?
So the mode that we're deciding right now, I think in all probability, it will be more of either a QIP or OFS. And but having said that, details are being worked out. And the moment it gets finalized, we'll be coming and sharing that details with you.
Okay, and we look forward to speaking with you. Thank you so much, Mr. Asthana. We'll do one thing, slip into a short break now. Up next, Q4 and FY23 GDP numbers will be released later today. We'll get your preview after this short break. Stay tuned.